So I hope you're all doing well out there. Today I've got some bad news for you. In fact, that's a little bit of a lie. I've got some bad news, then I've got some good news for you, and then I've got some bad news for you. So we've got a bit of a mixed bag with news today. So starting off with, first of all, the first bit of bad news, and this is what I've actually been looking forward to all week, is Revolution Beauty. They decided to bring their accounts out, and I was really looking forward to what guidance Revolution Beauty give going forward, and I'll say the reasons why in a little bit. But first of all, what I'm going to say is, obviously you can see today the stock was down 16%. Now, what was actually quite surprising is the stock actually opened up pretty positive, as you can see here, and then gave it all back again, which is quite something to see a swing like that. Quite volatile here, but it is a 91 million market cap, so it is quite easy to move that sort of size company, but it was a massive volatile day. Now, there's sometimes where stocks go down 16% and you'll hear me say, I don't think it deserved to do that. But today, I do think it deserves to be down 16%. I thought the news they brought out was a little bit disappointing, and I can understand why investors went, ugh, we're going to sell the shares today. Especially because I would be thinking that there's quite a few investors that are up on their position that have been buying this time frame, they're probably selling it. And I'm not going to lie, like today I was actually in the point of view where I was up over 100% on my Revolution Beauty shares. And even I was thinking, you know what, shall I take a bit of profit off the table here? And I didn't in the end, but I am still very much close to selling the position, and I'll kind of say the reasons why I potentially could sell this position. So what happened is Revolution Beauty brought their final results out for the year ended 28th of February 2023. Now, we've kind of got most of this information already, so there wasn't much shock in these numbers. We knew the revenue wasn't great growth. It was pretty weak in the first half, but okay in the second half. We see adjusted EBITDA was a little bit weaker, and operating losses as well was still a little bit high. So we kind of knew these numbers already. There weren't much surprise there, but for me, if I'm going to hold this stock in the long term, these numbers need to be better. If it was these numbers, I would actually be selling the stock right now. But these are the reason why I'm not selling it. I'll point that out in a little bit. Now, cash went down a little bit, debt was up a little bit as well, which I thought that wasn't good. I was a little bit disappointed with the way the balance sheet was. We're hoping for it to be a little bit healthier. But the big thing I straight jumped for is the current trading outlook. Now, why this is key, because as I showed you just a second ago, the actual results, financial results, were pretty poor. And if it was just that, I would have sold the stock. But what's keeping me in this is they brought a Q1 trading update out, and as you guys probably know, in that Q1 trading update, the revenue increased 60% year over year, and I was like, wow, 60% year over year, even if we grow like 20-30%, I'm happy with that. Even probably like high teen, I'm happy with that. But 60% is absolutely amazing. I was thinking, if this company's growing at 60% year over year, that's a game changer there. That's a game changer. If you're growing that fast, your valuation is totally different and your performance is totally different. And I thought, okay, I'm going to see what they do for the rest of the year now. Well, let's look at Q2. And I was hoping today we're going to get some more information on Q2. Are they still growing 60% year over year? And the answer to that is, I don't know. They did not tell us. So what they said is, Q1 financial 23 years were particularly weak due to consumers previously overstocking, with EBITDA at 3.5 million. Fair enough, we're in financial year 24 now. Looking at here, they said that as previously disclosed, the current expectation for financial year 24 is high single-digit growth in revenue and adjusted EBITDA in the high single-digit millions. But they did say that trading has continued to perform ahead of expectations. So I was thinking, what are they performing here? Are they growing at 60%? Are they still growing ahead of expectations? And then I look in here and they've still got this guidance line of like high single digit growth. And I'm thinking, well, if you've just grown 60% in Q1 and your guidance is only for high single digit revenue growth, that suggests that your revenue is going to be massively down in Q2, Q3 and Q4. And that's the thing, like if in Q2 and Q3 and Q4 the revenue is down or very slow, I'm selling out of this. But if the company is growing at these sort of rates, I'm holding this. And what was disappointing is they came out with this update today with basically numbers that we know about, and they gave no other evidence on what they're doing in the longer term. We still don't know where we're at. We still haven't heard since they did this kind of middle finger up at Boohoo and saying actually we're in very good growth. Since then, we've not actually heard what they're growing at, and even today, we still have no idea what the business is growing at this year. So for me, I was massively frustrated with this update, and I nearly went, you know what, I'm just going to sell out this position now. I'm up. I'm just going to take it. You know, there seems to be messing shareholders around a little bit. And I actually emailed a while ago the investor relation team at Revolution Beauty saying, can you give some clarity on how you are growing 60% in Q1, but yet growing single digit in the rest of the year? Like, can you give some clarity on what's the big gap here? And they actually didn't reply. And same again, we're another couple of months on and there's still no clarity here, which is absolutely frustrating. So for me today, I look at this going, you know, why is the stock down? I understand why the stock down. Shareholders were a bit peed off today. They were thinking they were going to get a bit more clarity on what the growth is longer term, and I did as well, and we didn't get it. And I can see a few people went, well, you know what, you messed us around the last year and a half. Now you're not being clear on what you're growing at. I'm just going to sell here. So I understand why the stock's down today, and even for me, I nearly walked away from this stock today. So yeah, a little bit disappointed with that one. Worth pointing out that they did announce the CEO. They did announce that Lauren Brindley will be becoming the new Revolution Beauty CEO on 18th of September. She did most recently work at beauty and personal care at the American pharmacy giant Walgreens Boots Alliance. So looks like a decent appointment. I don't know if the market was maybe down on the stock because of maybe that appointment and they didn't like it. It seemed okay to me. But yeah, I think the big thing is just being messed about and thinking, you know, I think the mess shareholders out a little bit there. So anyone from Revolution Beauty watching this video, you need to sort it out, guys, because you're peeing off your shareholders. Next one. Bit of good news. So we've got a bit of a sandwich. We've got bad at the top. We've got some good filler in the middle, bad at the bottom. So Shopify, good news today. The stock is up over 8% today. And it came out with a little bit of surprising news. I did not see this coming out. Shopify says merchants can now use Amazon's Buy with Prime option, which is a little bit crazy because you didn't think this was going to happen. But Shopify merchants will also use Amazon's fulfillment network and we'll have the option to add the Buy with Prime app from the ecosystem directly to the Shopify checkout. Surprising. Good move. I can see why the stock is up. I think this is a good move from Shopify. I understand why the stock is up. Didn't see it happening because they were very against this. And obviously Shopify themselves are working on their own logistic network. Now, obviously we know that they've sold off the logistic network. And I'm sure the company that did buy the fulfillment network and logistic network are looking at Shopify a little bit now going, hold on, you just dumped this part of the business off and now you're actually going to go with Amazon? Like, you've screwed us over a little bit here. So from their point of view, I'm sure they're not very happy about it. But from Shopify's point of view, yeah, 100%. This is the right way to go about it. Shopify obviously tried building up its fulfillment network, found out how hard it was, found out how much the costs were going to impact them a little bit, and went, this is too hard work, and got rid of it. And obviously that's going to help the profitability. But as well as that, hopefully conversions come a little bit better. Also, you know, the fulfillment side of it, you know, who has the best fulfillment network and logistic network in the world? It's probably Amazon. You know, it's better than anyone else out there, you know, compared to FedEx, UPS. They've probably got the best logistics in the world. So this is a really, really good move for Shopify. And actually, if anything, it's really good to see Amazon and Shopify be partnering up, because for so long, we've basically heard, like, you know, Shopify, it's either Shopify or it's either Amazon. You're either Shopify or Amazon. And to see them actually, you know, tying up nicely is really good, because, you know, if you imagine Amazon have the kind of customer base there, and also Shopify do the, all right, you can go to Amazon if you want to get it from a reliable seller and get the cover and all that. But if you want to, you know, actually build up a customer base as a seller, you're going to sell on Shopify. Both of them can work together really well. You know, if you want an actual website, that is Shopify is for that. If you want to go through a seller that already has the customer base, you go to Amazon. It would be very good for them to do more and more of these partnerships. And I actually think, you know, the only thing I would say is like regulation point of view, but Shopify, you know, gets bought out by Amazon. Very good move for Amazon. You know, you can sell your things directly on Amazon, and you can also build your own site through Amazon, through the Shopify platform. I think it would be a very good purchase for Amazon. But obviously, regulatory point of view, I don't know if that would happen. But yeah, I think it's a good move from Shopify, and it's good to see them two getting a little bit closer together. I think even if you're an Amazon shareholder or a Shopify shareholder. So yeah, I can see why the stock is up today. Now, the last bit, this is once again bad news, unfortunately, and this goes back to the kind of fears that I have around there could potentially be, I'm a little bit less confident in the stock market since where I was a couple of months ago. I've seen a lot more things to make me more negative on it, and unfortunately I've saw some more data in the last few days that help support that theory anyway. So the stock market had a little bit of wobble through August, as you can see here. It was a bit of a tough month. I took a bit of a kick in the teeth through August in my portfolio, but we moved into the back end of August and into September now, and the rally has started to happen in this last kind of week in August, and the S&P has started rallying up a little bit. Big one for me is looking at the Russell 2000. This more reflects my movements in my portfolio. So you can see here the actual Russell was down nearly 8%. I think that's a bit of a fair reflection. And then in the last few days, you can see here that the Russell 2000 is actually up 3.3%. So there's definitely been a bit of a wobble in the market, but there's a bit of a recovery going on at the moment. And the recovery is by this. So this is actually bad news is good news. So what actually came out is that the labour market is losing steam. And I've always said that we can't have a recession until the job data comes in weak. Now, unfortunately, we've not seen weak job data through 2022, most of 2023, but it's starting to happen. We're getting the weak job data, and that's worrying. We saw weak job data in July. We're starting to get the weak job data in August. And the job data in August is pointing to employment slowing down, and that is a little bit of an issue. That shows the economy is slowing down, and if those job losses start increasing or there's less jobs available, that's when I start getting a little bit more worried about recession, and we've started to see that happening now. So back-to-back weak job data, this is not good. That fear that the Fed are going too far and they are going to snap the economy, it's starting to come reality. Them effects of them interest increases that started coming in, the Fed think they're going to start coming into the system in 2 or 3 months' time. No. If you start increasing them interest rates, it takes a year for them to start kicking into the economy. We only saw them a year ago really start kicking up those interest rates. So you think if they still carry on increasing them now, you think about where the market's going to be in a year's time, or the economy is going to be in a year's time. It's not going to be in a good place. So the fact that the economy is starting to weaken is not good. And the fact that they are thinking about increasing interest rates still, not good. Now, obviously, the reason why the market is rallying a little bit since this data came out is people have gone, oh, well, if the economy is starting to weaken, the Fed won't go that far and they'll start actually holding off their interest rates. And there's that kind of bad news is good news because it will stop the Fed from increasing interest rates. Unfortunately, I don't think that's going to happen. I think if this is the weak job data is coming in, I don't think it'll make a difference to the Fed. I think whatever happens, they'll put them interest rates, and you top that off with the economy starting to weaken. It's not good. It's not good. So the S&P and investors currently are going through bad news is good news rally. I think bad news is bad news. I think people are thinking about it too much. Unfortunately, whatever information comes out, even though the Fed justify, we can put up interest rates because it's still a good economy, I think they'll still put it up, even if there's some warning signs starting to show. It's not good from me, so that's obviously not great. It's also worth pointing out as well that US consumer confidence did also pull back in August after it's been on a little bit of a rally. I don't blame them. For me as well, I'm looking a little bit at the US economy at the moment. I'm a little bit nervous about what's going on, the interest rates going on at the moment, the weak job data is coming out. It's not good news. So the point of view of that, hey, I'm being a little bit more cautious. I've not had a cash pile for the last year and a half. I've just been buying stocks. I've got to the point where I'm building up a little bit of a cash pile just in case. Still buying stocks. I'm never going to try to time the market. I'll be an idiot to do that, but a little bit more cautious than what I have been in the last year and a half for sure. Hope you enjoyed the video. Hopefully there wasn't too much bad news in there. I did try to put some positive news with Shopify in there in the middle, but yeah, overall that's what's going on with Revolution Beauty, Shopify, and a little bit of weak economy data that's coming out at the moment. Hope you enjoyed it anyway, guys. Catch you in a bit.